Have you ever heard of a unicorn? No, not the mythical creatures your little niece obsesses over. In the startup world, it's a term for companies that manage to hit a valuation of $1 billion or more. Now, investing in startups can be akin to panning for gold. It's a bit of a gamble. You sift through a lot of gravel and hope to find a nugget that dazzles. Most won't find anything, but there's always that chance you'll hit the mother lode. How money is made or lost. First things first, investing in startups is not for the faint-hearted. Many startups go belly up before they can say IPO. For every company that goes public or gets acquired for a hefty sum, there are dozens that fail completely. But yes, people do make money investing in startups. The general idea is that you provide capital to a startup when it's valued at, say, $1 million or $2 million. If all goes well, and that startup blossoms into a fully fledged company that's valued at $1 billion, your initial investment could multiply by 500 times or more. The angel investors. Angel investors are the gutsy individuals who provide funding for startups in their early stages. These are often the first wave of external investors. They take big risks, but potentially reap enormous rewards. Angels aren't always just lone wolves either. They often form syndicates to pool their resources, spreading the risk across multiple ventures. There are famous folks like Chris Sacca, who famously invested in Twitter and Instagram, or Peter Thiel, who put money behind a fledgling Facebook. Portland and startups. Here in Portland, yup, I'm nestled right here in the rainy, coffee-soaked paradise of Oregon. We have quite the vibrant startup scene. It might not be Silicon Valley, but communities and incubators foster innovation and provide support for those looking to take the plunge. Risks and rewards. But with great potential returns come great risks. Statistics lean heavily towards failure for most startups. Moreover, even if the startup doesn't flatline, your shares could be diluted in future funding rounds, and your say in company matters. Practically zilch. There's also the issue of liquidity. Startup investments are typically a long play. You can't just sell your shares like stocks when you fancy. Strategic investing. So, how do you tilt the odds in your favor? Diligent research and diversification. You need to consider the team's capability, the product, market size, and competition just for starters. Then, even if you're convinced, spreading your investment across several promising startups can mitigate the risk of any single one failing. The bottom line. The potential to make money from startup investing is undeniable. There's a never-ending fountain of stories about investors who hit it big. However, they don't often publish the tales of loss that are magnitudes more frequent. If you're considering it, my advice is to only invest what you can afford to lose. Be prepared for the long haul, and remember that for every headline-making unicorn, there's a graveyard of would-be contenders. It's not just about the money either. Some investors get a thrill from supporting innovation and witnessing a small company grow from its blueprint infancy into a market-defining titan. The most successful investors in this space combine intuition with experience, luck with research. They understand it's a high-stakes game, but when it pays off, it can pay off big. Be judicious, be patient, and maybe, just maybe, you'll strike gold.